Rolling. Good morning, everybody. Welcome back to the morning show. Stock Market TV. Spencer, Steve, JC, Alfonso. You know the drill by now. What do we got today? Ari Wald is joining us, and he is one of our favorites. It's been too long since we've had him on this show. He'll be on at 9 to share his charts, tell us what he's watching, what he likes, what he doesn't like. It is Wednesday. We have mornings with Mary every Wednesday. Let it be around 9:40 or so. In the meantime, of course, we'll talk about Tesla. We'll talk about Boeing, maybe Visa, whatever's on the guys' minds, whatever's on your mind as well. Good morning, chat. Hope your morning is off to a good start. But enough about me. You didn't come here just for me. I know that. You came here for Steve and JC. Believe me, I'm well aware. Let's bring them on. Let's go.
Oh, yeah. Let's go. We are back. Spencer, Israel, and I matching today. Spencer, looking good, buddy. Are we good? Hey, Strazza.
I forgot my light. Hey, guys.
What's going on, my man?
Oh, not much. How are you?
I just want to say that I make the best ribs. I make the best ribs. I share my recipe with other people. They come back to me and tell me that they now make the best ribs, right? The system is idiot-proof. You understand me? I don't understand. You really can't screw it up. You wrap the ribs in the aluminum foil. You let them steam in there, low and slow in the oven. I say it all the time. The oven is underrated. Underrated, the oven.
That's a hot take. I like it.
You know, the kids with their devices and the sous vide and all these smokers and that and this and that.
Well, when you sent me that video, I mean, they really fall apart, huh?
You think I was kidding? Because it steams in there. 5-6 hours, 220. Woo-wee.
He sent me like a minute-long video of him picking through the ribs and opening up the tinfoil when he was done cooking it, Spencer.
Because I have one of those claws, which, by the way, is one of the best purchases one can make on Amazon. It's like $3 or $4, like the bear claws. I use them every day. I use them to cut steak. I'm always cutting little pieces of steak and chicken and stuff for the kids. So, but even if
like
you don't have kids,
like the giant barbecue thing, like the fork, the barbecue
it's
fork.
Called a bear claw. Like you hold it, and it's got like the claws, and you can hold, like you could poke and then cut with,
Oh, geez. Okay.
They're great.
Oh, I see it. It looks like it's like brass knuckles, but with
it's kind of like brass knuckles. Yeah, but it's like a claw. It's fantastic. They're like $3, $4. Get a couple of those. Just keep them. Dude, they're awesome. They're awesome. That's what I was using.
That's cool.
Yeah. All right. Shout out, oven. Shall we? Spencer is.
Yeah, sure. Ron Calling in the chat. Who cares? Great question. I ask myself that all the time. All right.
We care.
Stay in the market.
A lot of people care.
I agree.
All right. I got a great chart that I want to talk about. But first, let's go a quick little market rundown here. We've got the Dow futures flat on the day. S&P 500 futures up 20 basis points, about a little over 5,100 here for the S&P 500. NASDAQ futures up big this morning, 120 points. That's close to 2/3% for NASDAQ futures. Bond futures, hello, down again. Right? You see how this is like tradition around here, right? 30-year bond futures getting smoked. Looking to lose that 114 level finally. Gold down 50 basis points, hanging in there around 23.30. Silver still above 27, down 0.75% this morning. Copper up 0.75%, pushing 4.5 for copper futures. Wow. Crude oil futures down 50 basis points, just around $83 a barrel. Dollar slightly higher this morning with the volatility index down back below 16. And Spencer Israel over in the funny money. You've got Bitcoin up 180 points, 66,600. Ethereum 3280, up almost 2% on the day. And just finishing up with crypto here, we've got Solana 160, up 3% on the day for Solana, and total crypto market cap Spencer Israel, 2.396 trillion. So just under
that might as well be 2.4.
Yeah, we'll call it 2.4. Sure. How are we feeling about that?
I'm surprised Bitcoin hasn't broken out yet.
I don't know why you. I'm actually not surprised at all. If anything, I'm surprised at just how well Bitcoin is held in. If anything, that's the biggest surprise. Just how impressive it's held in there. I'm not surprised that it hasn't broken out, but I am impressed at how well it's hung in there.
I think that's just your bias. Why would you be impressed that something is?
I have no bias. What bias?
Consolidating in a resilient fashion in the context of a.
Why am I surprised? Because every time it comes to this price, it gets the shit kicked out of it. That's why. And this time it's not.
Okay. We'll see.
What do you mean we'll see? We are seeing. It's not getting the shit kicked out of it. It's hanging out there just fine.
Yeah. I think a breakout's imminent.
I agree. I don't think, but I'm not surprised that it hasn't happened yet. In fact, quite the opposite. I'm actually surprised at how well it's held in. I'm telling you, it's very impressive. I don't know what the market's going to do. Neither do you. All I could do is take the data and say, hey, that's interesting, or that's surprising, or that's not surprising, right?
All the crypto stocks up again here in the pre-market this morning. I took a shot at some MicroStrategy against these prior cycle highs yesterday. You like that? MicroStrategy 1300?
Yeah. I think it comes down to time horizon, right? How cute do you want to get? How short term do you want to get, right? I think it comes down to time horizon. I don't have any problem with it. I'm with you.
Big earnings day.
Is it?
We got a Meta.
We have a Meta.
Today. Yeah.
Not today?
Yes. If you want to pull in the calendar funds, we got Meta tonight. And then tomorrow's the big one. We got Microsoft and Alphabet tomorrow. But we had Tesla last night. Tesla's big.
Yeah, I'm so tired of Tesla.
What are you tired about?
I saw you tweeting about it.
You saw me tweeting about it?
Yeah.
Oh, yeah, because I was talking about, because for me, Tesla's one of those things, one of those stocks that has kind of like a built-in short squeeze.
Yeah.
Because like people are just angry about it for reasons that have nothing to do with the stock itself. Like maybe they're liberals that don't like how, Elon has gone to the right. Maybe they just think he's a fraud. Maybe they don't like rich people. Maybe they don't like South Africans. Whatever. I don't know. But people are just very angry.
But it's usually something to do with Elon Musk. I think you nailed it there.
I don't think it's South Africans in general, though. It might be one particular South African.
Spencer, tell us, why do you hate him?
Who hates him?
Me?
Yeah.
Oh, why do you think I hate him is interesting to me. No, I find him annoying, but I wouldn't say I hate him. He just irritates me. Elon? Yeah, but I mean he's objectively a really smart guy, just like he's obviously very smart at some things and very dumb at others, right? And that's okay. Nothing wrong with that. We all are, but that's the way it goes.
Yeah, I mean, listen, it's not our place to judge. It's our job to make money.
Right. Yeah.
Right. So I really don't care. People are like, oh, but it's a fraud. I hope it is. I hope it's a fraud. That would be fantastic. Frauds are a great time to make money. Ponzi schemes, frauds, all those things. Great place to make money. I hope it is. Tweeting about
if we want to talk about maybe we should talk about the stock here. Just the actual the reaction to the earnings and
so what happened? Talk to me.
So I want to say that I used to be one of these people that was always trying to justify the reason for the post earnings reaction, and I still do it sometimes. But this morning is really exhibit A as to why that is folly and not really worth your time. Because if I told you that everything that Tesla said was every key number they came out with was negative, earnings per share missed, revenue missed, deliveries missed, or down year over year, production down year over year, net income falling, every key number was either below estimates or falling year over year or both. And the stock is up. What I don't even know what it is now, but last I checked, it was up like 13. What is it up now? It's up 9% now. Okay, in the pre-market. And the one thing people are hanging their hat on is the
it's up
fact.
11.5%, Spencer.
Okay, 11.5%. If I told you all of that, and you would say the stock is down, but it's not. It's up 11.5%, and they
But what do
are
any of those things have to do with the supply and demand dynamics of the stock?
No, it's that the market's good at pricing things, guys. Right.
right.
And not I'm not picking on you, but if you're an investor and you haven't figured that out yet, like you better start figuring that out soon.
Right. So that's the point I'm getting at, though, is like the numbers were just objectively bad news, but the stock is up, and that's all that really matters.
News, but hold on. But here's the key point: bad news relative to what? Right? Because obviously the stock's gotten the crap kicked out of it. So clearly, those investors with better information, more money, better data, inside information, I'm sure, so have already acted upon that. And all the schleps that are waiting for the news to hit.
Yes, look,
right?
This is what makes investing hard and fun, particularly hard for fundamental people. It's that you can guess the outcome. You can guess the earnings results and be right.
Sometimes.
Exactly. So that's hard, right? But that's step one. What are the results going to be? Then there's a whole nother thing after that, which is what is the market's reaction to those results going to be? Which is oftentimes counterintuitive, like the situation you're describing here with Tesla.
Yeah. Right.
If you nailed all of those results and you knew that earnings report was going to come out that way, you're thinking, I'm going to short Tesla. And then the stock's higher. Guessing the market's reaction to stuff is the tough part of this.
Right. Now, all this is said with a giant caveat. It's 8:45 in the morning. Okay. A lot of things can change very quickly. We'll see what happens at 9:30 or thereafter. But, as far as the justification aspect, and yes, thank you to Snay Meta in the chat. Yeah, the gross margins were actually all right, but everything else was not. And the one thing they're hanging their head on is the fact that they came out and said, hey, actually, we're going to be making a new lower priced model. And we're going to start production on that potentially later this year, maybe early next year. And that's the justification that I'm seeing this morning. And I saw last night. It was that, lower price model. That's what people are hanging their hat on now. I don't know. And I guess I don't really care, right, what the justification is or why. But what interests me the most is the reaction to the stock. And the stock is up. And that's kind of all that matters. So, yeah.
Strazza asked me a very interesting question. I think it was on Monday, and said, JC, right? Because I've been very delta neutral, selling premium, watching all these investors that have that lack discipline, right? All of these investors with no patience whatsoever, slinging short-term calls left and right, getting chopped up. Our goal has been to take advantage of that. John Deere, for example, has been Exhibit A, choppy, 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 choppy. Perfect, right? Sold puts on Berkshire Hathaway last week. Another one for the good guys, right? These trades keep working. Now, Strazza on Monday said, well, JC, what's it going to take for you to start putting on some more directional positions, some more long positions? And I'll say, it's like porn. You know it when you see it. Well, here we are. Tesla, above 160. I like it, Strazza.
Throw my chart up. I'm picking up what you're putting down, dude.
Throw up slide 2, because my chart's probably better than yours.
Put my chart up. I asked first.
Put my chart up. My chart's better than yours.
Put them both. Hey,
my chart's better than yours.
Hey, split screen. 2 charts.
Let's put them both. We'll put them both up. I'm sure they're both fine.
Come on. So this is the JC chart. This is as of yesterday's close. We're back above 160 now.
JC chart. Vote, chat.
That's pretty good. It's pretty good. Hold on. They haven't seen your shitty chart yet. So show your disaster. Let's see.
All right, going in the chat.
A little momentum.
I love how we align the exact same levels. I liked, you're getting cute there with that bullish divergence. Getting a little cute. Getting a little cute. I think JC wins. Can we get a vote on the chat? Can we get a vote on the chat? Ready?
Hold on.
To JC's chart.
Divergences are, I pay more attention. I care more when there's not an extreme reading at the divergence, right? So the fact that it's still hit overbought, it's diverging. It's making higher lows, but it's still hitting overbought.
Can you show JC's clean one? See, Strazza put some arrows in there. I didn't have time to do that. All right, maybe we'll give this one to Strazza. All right, this one goes to Strazza. Shout out Strazza. Even the sun shines on the dog's ass every now and then, right?
The early returns are in. The early returns are in for Steve on this one.
But
So,
listen,
No, I'll give it to him. I'll give it to him.
this is Tesla. This is Mag 7, right? So I'm talking about selling puts in Apple or buying the dip in Apple. Can't you make the same argument that this is Tesla? It's a bull market. Stock's been down pretty good, hasn't been participating. Just find a level. I don't hate it long here. I'm probably not going to put this trade on, but I get it. I like it. I'm not a Tesla.
I like it. I like it. I like how these people are just angry. Like
Yeah.
the stock, by the way, the stock has lost 2/3 of its value. Right? So all this bad news that Spencer was talking about yesterday, in theory, it's bad news. But why the hell do you think that this thing's gotten the shit kicked out of it? 2/3 of its value gone.
Right, exactly. And so let's not forget all these numbers that Tesla's getting are from last quarter when the stock was getting the shit kicked out of it, right?
That's right. And if
So,
you think that there are people there that with inside information that haven't acted upon this already, you're crazy.
all right, well,
Isn't the Tesla
okay.
situation becoming more of like an electrification situation, and it's more about the grid than it is actually about them selling cars at this point?
It's more about the fact that demand for EVs has certainly, at least for the time being, it has peaked, and that's not a Tesla thing. That's an everybody thing, right?
Yeah, I guess that's no good for them. Damn. But if you're just looking out there on the road, I don't see other EVs that I would ever buy. They all look crazy. They look like spaceships.
Wait, can I just say,
None of them look good. Tesla's nice looking.
I had a big family gathering last night for Passover, and I drove up to my parents' house, and there was a Tesla parked in my parents' house, and I'm like, who the hell in my family drives a Tesla? I bet it's my Dutch cousins. Sure enough, it was my Dutch cousins, and I said, hey, how do you like your Tesla? They're like, oh, we love it. They're on the free. I guess everyone has a free month right now of the full self drive. They read the FSD, what they call it. He's like, yeah, I didn't even drive down here. It drove me, and he loves it. So good for him.
That's pretty cool. So
Yeah.
he says it works. He's a believer.
Yeah, he's a believer. He loves it.
Most of the people I know who have them do like them. Also, Spencer, fun fact:
all the Ubers in Amsterdam, speaking of the Dutch, are Teslas.
I just want to say, I too have Dutch.
That's when I was there.
I also have Dutch cousins, Spencer. So
why does everybody have Dutch cousins? I'm Cuban. Cubans don't have Dutch cousins.
I don't know, man. But I just assumed it was the Dutch, and it was.
Let me tell you something. We don't have a lot of Dutch people in Miami. But I'm into the Dutch, man. I'm into the Dutch. And some of this Dutch architecture from back in the day in New York City, like late 1600s, early 1700s, these Dutch did not mess around.
What is the Austin Powers line? The freaky deaky Dutch? Doesn't he? Right?
Wow, I haven't thought about that. I haven't thought about that reference I haven't thought about that in a very long time. Yeah, that's
Sean.
right. The freaky
It's
deaky Dutch.
not polite to give your wife a Dutch oven. It's not polite.
Freaking.
Don't do it, because some of my buddies, like my college buddies, they Dutch oven their wives. I'm like, why do you do that?
Bringing it. All right, we're bringing it back. We've gone too far now.
I would
we're
never.
bringing it back.
Okay, can we bring up the energy? This is a great chart. This is the chart of the day right here. Come on. So this is a ratio of the S&P 500 energy index, right, which the XLE tries to follow, and then the S&P 500, right? So energy index relative to S&P. And then what I did was at each of these turning points, the highs and lows in this particular ratio, I put the weightings at the time of what energy was as a percentage of the S&P 500. So this seems over the last several decades to peak above 15%. In 2008, this was almost 16%. By 2020, fell to 2%. Today, it's currently at 3%. How do we feel about that, Strazza? Does this feel early stages of an unwind?
I don't think we're going back to double digits, right? But we don't need to move the needle. You go up to, I guess, low single or high.
So you don't think we go back to double digits? Why would you, out of curiosity, like what would make you think that?
I think tech stocks would have to get a lot smaller for that to happen.
Well, they can't get any bigger.
There's just not
30% of the S&P 500 technology. And by the way, 30% of the S&P 500 after they kicked out Amazon and they kicked out Google and Meta and all these other tech stocks, and it's still 30%.
Well, the big guys grow fast enough to to be able to get 10% weighting in the S&P 500, there's like 18 energy stocks.
I think
in the
10%'s a
entire
lock.
S&P
I think
500.
10%'s a lock. I'm thinking
not
you know,
enough.
what did John Roke say? John Roke says we're not in a reversion to the mean business. We are in a reversion beyond the mean. Are we not?
You
Are we gonna
got
split
like
hairs?
you got like 20 stocks in the S&P 500 energy sector.
Wavy thinks we're going to 25% of the S&P 500.
There's no shot. There's no shot. No.
You're such a millennial, bro.
No, like there's no chance.
Dude,
Uh,
it's such a
unless
millennial comment.
unless everything else is moving in the opposite direction, that's not the bet that I want to make, right? So if energy's market caps are going up, I think it's probably a bull market, and other market caps are going up too. Even if energies are going up more, that's a lot of work to do.
From 2000 from
25%.
1999 to 2008, that decade, most of that was a bull market for stocks, Strazza.
Yeah, so woke, Strazza. Right, guys. What was it?
Strazza, stop being so woke, bro.
Yeah. So I don't know. Energy stocks, I think, will enjoy a very nice bull market. I think it's just starting. I think this is a secular trend. I think it's for commodity stocks more broadly, so materials too. But 25%, I think that's asking for a lot.
All right, let's get some wagers. Let's take some. We got Ari Wald in the house today.
Ari's going to agree with me. He's going to say not above 10.
There's zero chance Ari agrees with you.
He's good at
Spencer, it's Ari, right?
Yeah.
Dude, let me tell you guys. You guys are in for a real treat. Ari Wald, one of my favorite technicians of all time, right? So it's not just like my favorite technicians are only old people, right? I have a lot of elderly, heroes. I'm a big fan of some of my contemporaries as well. Ari Wald is one of those. So folks, if you don't know Ari Wald, Chief Market Technician at Oppenheimer, you're in for a real treat. Let's take some wagers. Throw that chart back up there, Spencer. Let's take some wagers. What do you think Ari's going to say? Where do you think he thinks we're headed? And remember, Ari's not Ari's about my age. He might be a year or two younger, but he's about my age. So he's not as young as Strazza or Spencer. So he knows better. What do you think Ari's going to say? You think he's going to agree with you? There's no shot.
He's going to say 10%.
He's going to say 10. I think it's going to be closer to 15. I don't think he's going to go out on the limb and say 25. I'm thinking 14, 15% is where he thinks it goes. JC, and I agree with that.
JC, XLE is up 4x from its lows that you're showing with the second to last green circle here, the 22% weighting. Right. This index has gone, S&P 500 energy stocks have gone up 4x.
Yep.
The weighting has doubled.
Right.
You get another 4x. You're at what, 6%? You get what I'm saying?
Well, also you're failing to realize how strong technology has been during this period, right? So technology has done very well with energy also, which is why the weighting has only doubled.
Energy's done far better than technology.
I know, but technology has done very well, which is why it hasn't eaten into the weightings as much as you would think.
So really,
based on the absolute performance.
Really, what this is not so much a call on energy; it's a call on tech. It's really what it is.
We're all saying bullish things. We're all agreeing you own energy stocks by.
Okay, Spencer's making a good point. How fast the weighting will increase will be dependent on technology. It's a great point, Spencer. It's true. Right? Because energy did great, but so did technology. So energy only ate into that by 2% because technology did so well in that environment, communications and others, right? Discretionary. So a lot of that is going to be the denominator fallacy, and it's going to be how much it eats into that weighting is going to be dependent on that technology. Spencer's right.
Tesla keeps falling. That'll help.
You know what's interesting about this chart too, and I don't know what the weighting was, but in 2013, ExxonMobil was the world's most valuable company, right? And and the weighting had already been dropping at that point. Again, I don't know what
it was still very, very elevated though. Nowhere near.
Okay, whatever. I just thought I'd point that out.
Yeah, but that's a good point, right? Energy was a much bigger deal, a much bigger percentage of the overall market. Today, it's nothing.
Well, my point was that it had been falling for five years at that point, and it still had the world's largest publicly traded company. So, anyway,
yeah, but again, that goes back to the denominator there, right?
Yeah, right,
energy didn't get going, right? Energy hadn't gotten going.
Because
technology hadn't gotten going yet.
Because by that point, technology had turned around when? I mean, 2011, 2010?
It was a
right?
slow grind higher. It didn't really get going until after that.
Yeah. All right, but that's a good chart though. So
I thought it was a good chart.
all right, we'll have
What
Ari
we
Wald
should do is we should do
up on
we should maybe add up energy and materials together as a percentage of the S&P 500 and kind of combine those. That could be another chart. That'd be good.
I like looking at it that way more.
You like looking at energy and materials together, right?
Yeah, I think for now that's going to be the same trade.
All right, cool. What do you say we bring in a mean man, Mr. Ari Wald?
No, not yet. He can't hear us yet. So let's wait for him to get his computer figured out. We can also just talk about Boeing or Visa or
yeah, give me another one.
What happened to Boeing?
What happened to Boeing? Oh,
speaking
this sort of fits. It's the same conversation as Tesla, where Tesla, the negative stock, negative expectations, everything bad, stock goes up. Boeing, same story. Expectations really could not be any lower for this company and this stock. And so when they come out and say, "Oh, it actually wasn't. It was bad, but it wasn't really that. It wasn't as bad as you might have thought," the stock goes up, right? So that's what's happened here in Tesla, in Boeing. The earnings per share beat estimates, the sales beat estimates, and basically that's what they said is it's bad, but not that bad.
This is one of the worst stock charts you'll find right now. Can't touch this.
Terrible.
Well, yeah. Bulls got to be hoping that this is not a top. This is not bull market price action from an intermarket standpoint. So this is consumer discretionary stocks relative to the S&P 500. Doesn't look great on an equal weight basis either. Doesn't look this bad, but this top completing would not be characteristic of bull market periods in the past. Discretionary stocks should outperform. This is a risk-on group. Investors should be playing offense. These stocks should be outperforming. This is some pretty bad relative weakness here. From a really
52-week lows every day relative to the rest of the market for consumer discretionary.
It was in a 20% drawdown this time 2 years ago and never really recovered. Weakness in this ratio does tend to lead market tops. Not saying we're headed for a market top, but if this completes and we keep heading lower, then I think you have to start thinking that way more and more. This is probably one of the most important intermarket ratios to assess risk appetite for me. This is as important as any of them. Would you agree, JC?
Well, I mean, I'm no economist or fundamental cat, but my understanding is that this is a consumer-driven economy, right? Is that right?
Yeah, that's what they tell me.
That's what they say. So if it's a consumer-driven economy, and these are the stocks where consumers spend their discretionary income, retailers, homies, right? Retailers, home builders, automobiles, right?
Yeah, no, it's an important group. Did Virtu just have earnings?
It's very possible. If you ask if a company X just had earnings at any point between now and the next 3 weeks.
I'll try and take a look quick. Let's talk about this.
Virtu, they report today. Yeah, they reported.
That's up almost 5% pre-market.
Nice chart here. This is a really nice reversal. This company pays a 5% yield.
So it's capital markets. So this is New York-based capital markets, broker, neutral capital markets,
high-frequency trade, market making.
The market maker is really high-frequency trader. They would tell you they are a liquidity provider. But
I bet they do.
Yeah, a lot of liquidity.
All right. We're gonna try this with Ari Wald, and he's joining us from his computer and his phone at the same time. So we'll see if this works. It's gonna be fun either way. How about that?
Cool. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Ari Wald in the house?
Ari.
Do we have Ari? Are we in? No, we're not in. Oh no. Can't hear you.
Wait a minute. Wait a minute. Wait a
Oh
minute. Wait a
no.
minute. Say something. Wait, Ari.
All right.
Oh, what the hell? All right.
Come on,
You know what?
Ari. Are we here?
I'm gonna go backstage.
For
I'm
somebody
gonna
who
go
does so
backstage.
much TV, really no excuses, Ari.
I
thought
know,
you
Ari.
remembered
You're
this,
like a big deal, man. You know?
All right. You guys talk amongst yourselves. I'll figure this out.
All right, so let's just do a quick little rundown. Dow futures down 60 points right now. S&P futures are now flat.
Mhm.
Nasdaq futures are only up 0.5%. Bond futures down 0.5%. Man, these bonds, I got to tell you, I mean, it's been quite the mess for these bonds, dude. At what point? So Strazza, so you've been kind of very nonchalant about this bond situation. Bonds just keep falling. At what point do you say, all right, this is kind of a big deal?
What's up?
It's not that it's not a big deal, right? I'm more concerned, at least for my money and what I do and the research that I'm writing, I'm more concerned about
you hear
bonds'
me?
impact on risk asset markets, right? So if equities just want to keep more or less whistling through the graveyard here, they're kind of calling bullshit and waiting it out, right? Probably looking on the horizon and seeing rate cuts at least some point in the future. And it seems like equity markets are willing to just wait that out. Same for cryptos. So until it starts flowing through and hitting my asset classes, I can't overthink it, right?
But why do Fed funds matter? Like, shouldn't we be more interested in 10s and 30s? Like, why are people so obsessed with Fed funds?
I think you said it.
Are they pretending that they're banks or something? Like, how does
I think
this
you
work?
said it well. I'm not a bank. Why do I care about the Fed funds rate?
Hey, like, why are people so obsessed with this Powell guy and the Yellen and the Ben Bernanke guy and all these?
I think it's cool to talk like an economist for some people. I don't really know. I'm with you, unless you're like a bank investor or actually a bank.
What kind of? But hold on. But in what kind of dork fest are economists cool?
Well, here's what it is, right?
Like, what kind of like ass backwards party to be like, oh, there's the economist. Let's go talk to him.
So the academic answer would be that's the risk-free rate, which is the bench for every other rate in the market. Pretty much every interest rate is a formula of the risk-free plus some sort of premium.
Yeah.
Right. So the Fed funds rate does matter for that reason. It matters more than anything in the bond market. It's the starting point. Outside of that, for us investors, what we do on a day-to-day basis, you want to watch the 5, you want to watch the 10, you want to watch the 30, right? You want to watch the curve. You want to watch foreign yields. You want to watch high yield, corporates. I'm not pulling up charts of Fed fund futures every morning. I'll tell you that much.
Have you ever met an economist that's actually cool?
They also don't change. What?
Have you ever met an economist that's cool?
That's mean.
I'm not being mean. I'm asking a question.
Don't we have some? You have some economist friends.
Now, I had dinner with an economist. He won a Nobel Prize. I'm not going to mention any names.
Yeah, I know.
This guy sucked. He just sat there in the corner with his cone head on. Like, he just sat there like this. He was a terrible person to have dinner with. Couldn't have been worse.
How can we make economists have more fun?
I don't know. What are they so miserable about?
I just want to say, Planet Money is a great show from NPR, and they're economy nerds, and it's a fun show.
Aren't they defunding NPR for being like too angry or something? What happened there? So is something happening there?
That's got nothing to do with what I'm saying. I don't know. Maybe not. I'm just saying their economic show is good.
Some of these economics professors aren't bad. I think Jeremy Siegel is more business.
Oh, Jeremy Siegel. He's the man. He's cool.
I don't know if he's economist. I don't know if he would identify.
No, he's definitely an economist.
Would he?
Wait.
Yeah, he's cool.
I could listen to his podcast with
Jeremy Siegel's the man. No, yeah, you're right. You're right.
I'm trying to take 2 with Ari here. Are we ready, Ari?
All right, let's go.
We're gonna go for it.
Hey guys.
Ari?
Oh, Ari Wald, thanks for joining us.
You hear me? You can see me. We good now?
Dude, you're looking good, buddy.
You made it.
All right, man.
What's up, guys? Hey.
Great tan.
Strazza, Parets, thank you.
Wald, are you how many days a week are you on the baseball field?
Oh, every day. Every day.
Are you doing 7 days a week?
10U, 8U. Getting the little one in T-ball clinics there. It's awesome.
So I got my 3-year-old daughter. She's my 3-year-old daughter is on a team of 4- and 5-year-old boys. She hits the ball further than all of them.
Yeah, well, she's got probably the best coach in the league right there, right?
Well, I thought it was the opposite because she wasn't hitting the ball at all, and now all of a sudden on Monday she's Babe Ruth all of a sudden. So this is a new one. So we'll have to
How would
share some
JC,
notes.
for real though? How much fun is it, right?
I mean, they're 3, so it's more of just a complete shit show.
Yeah.
You're actually playing real baseball.
Yeah,
right?
yeah. The 10U's a lot of fun. 8U, we're doing kid pitch for the first time, and for those guys, and that's quite the season. There, a lot of patience required finding your pitchers. A lot of walk.
I bet. Ari Wald, so chief market technician at Oppenheimer. Are we frozen? Did we lose Ari?
You can call me that. Hello?
No, he's still here. We got him.
Okay, cool. So Ari, why don't you talk to us? What do you first of all, can you some of the audience members might have been living under a rock and don't know who you are, right? Maybe explain a little bit about what your role is, what your day job is, who you're speaking to, and then we'll get into the markets a little bit.
Yeah, you got it. No, I had the technical analysis research product at Oppenheimer, talking to both institutional clients as well as we have a great private wealth division that I deal with as well on a day-to-day basis, though. So providing top-down market ideas, generally define my time horizon as 3 to 6 months. Keying on those bigger picture trends, don't really kind of consider myself the day-to-day technical trader. Understanding market cycle, getting into the right ballpark, sector and industry selection. And then from a bottom-up perspective, as far as our stock level ideas, we are momentum investors that overlay technical analysis on top of our process. Our philosophy based on the kind of academic research of the momentum factor, where stocks that have outperformed over a prior 12-month period, often stocks that continue to outperform. So we're attempting to create and put together diversified, high momentum portfolios. Understanding kind of the limits to what we're doing. That factor, as any factor, doesn't always work, but through time, through various market cycles, has proven to be an alpha generating factor.
Generating alpha is the goal around here. Ari, who are you speaking to during the day? Are you speaking to advisors? Are you speaking to the private portfolio managers? Like, who are you talking to?
Right. So all my, if I'm on the road, I'm speaking to institutional money managers and hedge funds. But on a day-to-day basis, I'll have a lot of the OpCo private wealth brokers reaching out to me, especially when volatility hits. When the market's going up, it's a little bit more quiet. Fundamentals are working. As soon as the market starts going down, the inbounds come in. And so over the prior recent weeks, especially with this little spike in the VIX and market correcting for the first time since last fall, a little bit more interest in technical analysis. We say kind of interest in our work correlated to market volatility. And so times like these, I embrace it and trying to add color and some understanding to what's going on.
How come they don't want you when things are good? They don't need you in bull markets?
Then the fundamentals are working then, Strazza. You know the deal, right?
Yeah. And then all of a sudden, Ari, what's the next level? What's the key level? Yeah. Where's the support? Right?
That's right. And I'll tell them ultimate support at 0 at the end of the day.
That's
right.
Well, that didn't work so well with crude oil now, did it?
That's right. Yeah, that was just the anniversary of the negative $40, right? A couple days ago.
Well, we all got a good chuckle of that. Do you think it's a coincidence that's when commodities started to outperform?
That was probably a major inflection point, right, for commodity prices. My kind of view on that, just taking the bigger picture view on commodities, that these long-term trend changes don't have to be from down to up. And I think that was a secular shift in commodity prices, which had been down for pretty much the prior decade before that. And I think now commodity prices are going to be more range bound. I think there was a significant surge, obviously, from 2020 into 2022. And I think now we're in the leveling off period where they're going to be more range bound looking ahead.
Ari, we were taking some bets as to what you would say. I don't know if you heard that. I hope you didn't.
I didn't hear anything. So
I
give you my bid, I'd love to hear kind of which way how
All
Otani
right.
bet on this. Yeah.
All right, Spencer, you want to throw up the energy? Throw up slide 4 there. I think this one is to me, in my experience with you, this is a very Ari Wald chart, very Ari Waldish kind of chart. So we're looking at energy index relative to the S&P 500 is the black line. And then what I did is that I overlaid the weightings, the energy weightings as a percentage of the overall S&P 500 near those key points over the last several decades. It's peaked around 15, 16%, down to as low as 2% just a few years back. Currently 3%. How high, in other words, how much will energy be as a percentage of the S&P 500 this cycle?
So where did it peak at? I don't see a green dot on where it peaked at in 2022. If that was perhaps around 5%.
4 and change, maybe close to 5.
Change. Yeah, I think that's it.
We don't get past that.
Not significantly. I mean, we could push
really?
up.
You don't think we get into double digits at some point this cycle?
No,
this year, but ultimately.
No.
Wow.
My kind of big point, I don't think the dollar is weak enough to support, that's our cue. I don't think the US dollar is weak enough to support a super cycle in commodity prices. If you look at those prior significant run-ups in commodities, as the early 2000s in particular, it was accompanied by significant dollar weakness. I believe the DXY was down 50% from that 2000 to 2008 period. And given the inverse relationship between the two, I think it helped supported that big commodity run-up. I don't think we have that this time around. I think you have stable currency, range-bound dollar, translate to range-bound commodity prices. And I think the big run-up happens in the equity market. That at the end of the day, whether we're talking about commodities or interest rates or currencies, it's not high or low, but stable. That has historically provided the biggest tailwind for equity prices. And I think that's exactly what we have. Stable currency, stable commodities, stable interest rates that leads to this kind of middle inning secular bull. And what we see is an upside market surprise over the coming years.
All right, so hold on. So this is this Ari Wald who's looking 3 to 6 months out, like you described earlier? Or is this Ari Wald when we're having beers in 2030, 2032, somewhere in Midtown Manhattan? You could bring your vest, right? When we're having those conversations.
This is a little bit of a longer term theme that we're talking about here, where as we think about the divide between the market and commodity prices, really are the rise in technology, which is the market essentially now, just given the composition. The steadiness is underappreciated. We haven't seen long-term returns anywhere close to what we saw in the late 1990s. If you look at some of the long-term rate of changes, that the outlier and the divide between that and everywhere else has been on the value side and how poorly commodities done in some of those areas. So the case is that if that area can play some catch up, it's the case for catch up rather than catch down. I'd love to see it for energy, if energy becomes an investable sector again, if Europe overseas equities finally are entering a secular bull market period. Love to see it over the long term. I think that is the case, that the secular bull has additional legs here. And when that was the question you asked, where do we top, through this cycle over the next 3 to 6 months? Getting in the near term, I think market weight exposure to energy makes sense here. I think we can do better in terms of bottom-up stock selection. I think some of the refining stocks look particularly strong. If we're thinking about a structural change in that sector, let's start with the stocks where we have seen a structural change in their trend. The stocks that have already broken above peak levels from 2018 and 2014. Select E&P names have been able to do that. I'd say the broadest strengths have been on the refiners, and that's where I want to be for exposure to that sector over the next 3 to 6 months.
Talk to me about the bond market, Ari. I'm surprised by your answer. You don't think we get above 5% weighting in energy in the S&P 500 this cycle? That's a surprising answer. I took the over by a long shot. Strazza was right again. Strazza's been right again. Even guessing what Ari was going to say, I was dead wrong.
XLE would have to go 10x for that math to make sense.
I don't think so. Not necessarily. All right. No, I love this. This is great. This is great.
And
Talking
the
about
bond market too. I don't think it's funny you talk about 5%. I think the 10-year Treasury probably peaked at 5% in October of 2023. I think that's the upper end of this now range that rates are going to be in. Again, it's not high or low rates, but I think stable rates. That does support equity prices. And for sure, it has been this little rise in the 10-year going from 4.2 to 4.6%, which has stirred this market volatility. We've argued that's very Fed-induced. But with that said, Fed-induced volatility is market volatility that should be bought. Be much more worried if it was inflation-induced rise in rates and volatility. And so with that said,
well, let's
rates
stick with that,
probably
Ari.
have to moderate before the cycle takes off again in the second half of the year. But that is what we see as a catalyst, is for rates to just stop going up, looking out over the coming weeks.
But rates haven't stopped going up. Bonds haven't stopped going down. And when you look at inflation-protected treasuries, they continue to outperform nominal yielding treasuries. What's the bond market telling us?
I don't know. Credit spreads remain relatively stable. Inflation expectations, how I see it, have been contained. No, the bond market's telling you that there's going to be less Fed hikes than was initially anticipated, which I think what it does, it helps avoid the overheated
Rate cuts.
rate cuts. Excuse me, sorry.
I like that Freudian slip there.
That's
Ari.
right. Yeah, no, we've applauded the Fed's commitment to avoid a replay of the 1970s where they arguably cut policy too quickly. And we've shown that following an inversion in the yield curve, it's actually a Fed cut that has occurred closer to the market top. And so we've kind of said that would give us more concern if they were in a rush to cut interest rates. I think that would create your overheated market and this cycle would end sooner rather than faster. This time around, I think it's obviously stirred some near-term volatility. We're arguing it's volatility that should be bought. I think it's going to create, help elongate the cycle, but it'll be a steadier cycle to that as we look ahead. But the year two of the bull cycle, how we see it, is still intact.
Why don't we talk about sectors, right? So we mentioned some tech. By the way, before we get into the sectors for the rest of the year, technology, 30% of the S&P 500 doesn't even include Amazon or Tesla or Meta or Google or Netflix. You think that 30% weighting sticks, maybe even goes higher?
I think it would be bullish for it to go down. That, again, don't blame technology for those weightings. It's been how horrible the rest of these sectors have done that has allowed technology to get that big. That, again, it's the case for catch up, the convergence of what's going on underneath the surface rather than catch down. It's the outlier has been how poorly the rest of the market's done. That the steadiness, again, of technology is quite underappreciated. There's been checkbacks along the way. There was a significant one in 2022. There seems to be one playing out right now as it stands that I think provides an opportunity to, again, buy into that steadily paced secular ascent. So I think it's not just about owning technology here. We do like tech for the long run, but industrials and financials also score high in our momentum work. And I, generally speaking, I want to own sectors that historically have outperformed in a bull market environment. And then on the flip side of the equation, it's really the high dividend paying bond-like sectors that rate poorest for us, that have the poorest relative strength. Not that they're breaking down in absolute terms, but I just think that they are at risk to underperform in a rising market environment, as we do expect the equity market to start to move higher again in the second half of the year.
Let's stick with that because last year we were seeing high beta outperforming low volatility as the stock market did really well into the end of the year. That stopped at the end of the year. And to your point, you haven't seen low volatility outperforming high beta. They've kind of just been in line with one another. How do you think about that? Does high beta ultimately break out there?
That's right. It's how you look at it. On one hand, rates have moved higher, and we've actually argued there's been a resilience to the tape through that. As much as defensives, high beta stopped outperforming, there really hasn't been a definitive turn in that ratio. If you were to plot that ratio, high beta versus low volatility with a 200-day average, the ratio has maintained above the 200-day average. So we would say that the trend is still in favor of high beta offensive cyclicals. That's in stark contrast to early 2022 when rates started to move higher and you had a definitive turn towards low volatility. So yes, it stopped going up at the same pace as it was in the fourth quarter, but we would argue that the uptrend is still intact, and I think high beta could take over, and I think high growth as well. Those would be the two themes that in our head would make sense to outperform if rates were to stop.
Regardless of market cap, when you
moderate.
talk about growth outperforming, is that smalls and large?
Yeah, I think growth across capitalizations makes a lot of sense. I think large cap growth is a core position, but for that rotation potential, mid and small cap growth really strikes that attractive balance between long-term secular growth leadership and this intermediate term rotation potential in lower capitalized stocks.
How do you check yourself, Ari? This is a question I've always wanted to ask you. So Ari, as a profession, you know, you lean bullish, you lean optimistic. It's part of your job, right? Like other people, other analysts, other traders tend to be maybe more mean reverting. Again, a lot of those cases by profession, that's what their clients want them to do. So for a guy like yourself, when you sit there, what sort of process do you have to check yourself? Like, am I being bullish for the sake of being bullish, or is there real data here? How do you think about that? I'm really curious.
Yeah, I like to think we're a bit more market agnostic as far as we will be bearish if the case calls for being bearish. So, you know, there's been times we've been bearish, but with that said, if we have leaned bullishly, I would argue rightfully so. We are in a secular bull market, and so it probably makes sense to lean bullish if that's the larger backdrop that we're keying on. But there have been points in recent years that we were expecting market downside. And, there's what you expect to happen and then what is happening. So it starts with what we expect to happen, and we could follow the typical roadmap of what these cycles look like, a bull market and a bear market, how long they usually last for, how much they usually rise, and conversely on the downside. And then there's what is happening, and we're going to be looking for our indicators to either confirm or deny that roadmap. And so if our indicators start to deny it and diverge, and we were start to see a change in leadership or credit spreads starting to balloon, and particular areas working their way out of our momentum calculation, and stocks at the Paul Tudor Jones line start to break down below the 200-day, and we have to use that as a stop loss. That's how we check ourselves, that 200-day average.
That's a good one. Go ahead.
Do you change anything when we have these corrective phases like we've had over the past few weeks? I guess you could argue longer. Do you change your positioning? Do you overweight defensive sectors? Do you do anything, or do you just kind of ride it out?
That's a great question, because that came up on the call just as far as that first week of April, the Easter week there, we had the downside gap on April 2nd, and then on a Tuesday. On Thursday, the April 4th, the reversal day, where we kind of rallied into that gap and closed lower. And on the reversal day, we said, okay, signs of fatigue. It looks like there's some downside risk to the 5,000 level. And we got to 5,000 and kind of making the case markets are tactically attractive here, but there's some duration that's needed here. So I have to be very conscious that I'm talking to investors and traders with different time horizons. And so
when you say there's duration that's needed, you mean for the bullish call to make most sense, it's for longer time frame people.
Right. So long-term investors use that volatility opportunistically. VIX had spiked 50% above its 3-month low. The RSI, daily RSI was below 40. That's an opportunity. But I said, if you're going to be the one asking me tomorrow and next week, if the market hasn't quite taken off to new highs just yet, and why haven't we done this yet? If that's your time horizon, then you want to wait for the base. And that typically that we said we were probably within 2% or so of the low point, but the final inflection point may not be for several weeks away. If you look back historically how these corrections unfold, there could be a rally back to the 50-day average, then a final setback into May, and then you get into that June to August period, which is typically strongest in first-term election years. And we said we want to be increasingly bullish into that time period. So again, for us, it's trying to balance those different time horizons. Through that, we've said we did not change our positioning. We were all along is that it was tech, industrials, financials, all sectors that we've have favored, really through the balance of this cycle, and didn't make any significant changes in terms of the positioning.
You're not favoring things like energy or materials, maybe more so today than you were last year?
We like them selectively. I mean, we have written up the refiners favorably a couple months ago, and have been making the same call on energy. Select exposures is warranted. I can get behind some of the E&P names. Anytime if that group were to come in and you look at some of the service names that have still been making lower highs since 2008 and 2011, I know I'm not going to be able to defend them on a pullback. That's what I always think about. If that trade goes the other way, what can I defend? I know I can defend selectively some of those areas. I know I can't defend those. I'm going to say that downtrend is resuming. You better get out of that. So I think that's one thing I really key on. What's happening now? What's it going to look like if it goes the other way? And I want to be able to be in ideas that I know I can defend that are going to be correcting into support.
All right, Ari, you overweight technology, overweight industrials, overweight financials. What's missing in that group?
Well, I think from there, it's you can't be overweight everything.
Are those the big three? Are those the big three overweights?
That's where we're seeing the broadest strength. As far as we run these momentum scores on the Russell 3000, we're going to look at then aggregate how many stocks are in quintile 1 of our momentum calculation, net of those in quintile 5. And so it does capture some market breadth, and we're seeing the most strength in those 3 sectors. And then from there, we can start talking industry ideas, energy selectively. On the material side, it's really construction materials and metals and mining, the infrastructure side, which almost fits into that capital goods side on the industrial sector, that PAVE ETF, infrastructure ETF, we love. Selectively in consumer discretionary, I suppose that's really been a mixed bag. Some of the home builders have worked within that, but that's a very small setting within that. I'm probably less upbeat on healthcare than a lot of other strategists out there. But if pressed, there might be a few service names we can get behind. So that's the issue. As we work below those sectors, the broadness of strength becomes more concentrated.
What about overseas? UK FTSE 100, new all-time highs. It's got 0% technology, 25% is energy and materials, a lot more industrials over there, staples, hardly any discretionaries or communications, no tech.
Yeah, so we're U.S. over world. I think overseas, again, they're breaking out through major levels from decades prior, but on a relative basis, you haven't seen that turn. Again, that's the case for a market surprise over the coming years if those international equities can get going. As far as where the momentum is overseas, it's been Japan, and I wouldn't stray from that. I think for overseas exposure, Japan's still the place to be.
Is U.S. over world and overweight technology saying the same thing?
That's exactly what's saying the same thing. It's the benchmarks with a higher composition to the technology sector that's rate best for us in our momentum work, and that makes sense for us. Guess which sector has outperformed more than any other in a bull market environment? Going back to the 1930s. I think I've been on this show talking about all of them. Technology. So if we're in a bull market, it would make sense for us with the benchmark with the higher exposure to technology to rate best for us and outperform. And so that's why I think this is very consistent with our messaging too. The bullish.
What's the second highest hit rate?
Consumer durables, consumer discretionary.
Yeah. And financials up there at all? Industrials up there at all?
More mixed.
More mixed,
50, huh? 55, 60% hit rate, 60% of the time they rise.
So nowhere near technology's hit rate, which is 90+% of the time, right?
Oh, it's technology stands alone if you were to really line them up and to see how often each outperforms.
That's fascinating. Yeah. Very cool. Anything else, Strazza, while we have Ari?
Is XLF going to break out?
That's a great question.
You know what's interesting? I'm glad you brought that up. Yeah, we didn't hit on that. What's interesting about XLF is that every time it starts to look good, it just cannot sustain a period of outperformance over the last 20 years. And banks are a key piece to that puzzle. The reason why it hasn't been able to sustain outperformance. And we're looking at an absolute. I always think in terms of the relative, how that sector looks relative to the market. I do think that breaks higher because I think.
But isn't that just a denominator fallacy, Ari? Aren't you just dividing it by tech?
We'll divide it by the market. Yeah, I mean, at the end of the day, we want to beat the market. I mean, my institutional clients and money managers, they get rated on how they do relative to the market. If their client can just put their funds into an SPY, they will have to be able to beat that. So that relative ratio, I would argue, is much more important than the absolute price lines. That I expect to break out. Why? Because I'm so bullish on the market, and I think markets push higher into the second half of the year. Whether XLF can outperform through that, I think what's interesting, if you were to strip out the banks, the capital markets industry in particular has just an absolute amazing long-term chart, both absolute and relative. It's been making a series of lower relative highs, even when rates continue to move lower in that 2020 period. And I think that is a pocket of financials, which is set up to structurally outperform over a longer term basis. So that is a key reason why we're bullish on financials. For
what about
exposure
insurance?
to the banks, I would go large
insurance?
money centers look better than the regionals.
Hold on. No, you don't. Insurance is defensive, right?
Yeah. What about insurance, Ari? You're talking about how great capital markets look, and you're right, and we agree. Obviously, we talk about it here all the time. Insurance looks even better. Does that not count?
Insurance looks good. Yeah. And to Strazza's point, what is insurance? Is that a low volatility area? Is that defensive? I would say it looks better than any other low volatility area. And so that's where you want to be for low vol exposure. But we are overweight insurance as well, as we are all the sub industries of financials. And it's part of the reason we do like the sector.
Regional banks too?
Hold on. Capital markets, what are you using? Are you using KCE when you talk about capital markets? Is that the fund that you're tracking?
I've been using that one more recently because it is equally weighted. IAI also looks good, but KCE is a great one because it's equally weighted as well. So you're capturing that small cap exposure, and it really just shows the terrific relative strength. And another ratio that hasn't been disturbed through this market pullback. It's another ratio that shows offense over defense. And for the banks, no, I would go the large cap money centers over the regionals that I think look stronger in our work and where you want to be for banking exposure.
Some sort of catch-up trading opportunity in the regionals, or too cute?
Too cute. I mean, maybe. Yeah. I'd love to see it. If that's going to work, our market call is going to work. But it's really a beta trade as it stands. There's a lot more resistance overhead, and it's just tough to get behind them for the long term. If they start going south, I'm not going to be able to defend them as much as I would these other ideas.
I love that.
Ari, the regional banks, the KRE looks a lot like that high beta, low vol ratio. Looks a lot like small caps. Looks a lot like high yield bonds. Like very similar.
I think the high beta, low vol ratio looks like some of these large cap sector spiders that broke out and then failed, or more like NASDAQ equal weight or S&P equal weight. It's up there at the prior cycle highs. Boom. Bonds is
look at that. I mean, you're right on the brink of one or the other. I mean, if that high beta ratio, that top panel can really push through those resistance levels from 2021, that would be a significant breakout in risk. And you're right. We're kind of on the brink. And to your point, we're oscillating around that resistance level. I would argue that the moving averages are still intact, and the setup is still there, where I want to have some exposure to that potential breakout to the upside.
This is great. We could do this all day. Ari, you've given us a lot of time. I really, really appreciate you being here. You're the man, dude.
Thanks, Ari.
I'm glad this worked out. I'm going to do it. I'm going to make sure my technology is on point next time, and this is going to be great. And in fact, can I get a regular spot on this show? I really enjoy doing this.
Hell yeah. Hell yeah. We'll kick Strazza out. You can do Strazza's role.
Please.
I don't need to do that, but if you call, I'll be on. Let me know. Anytime.
All right. You're the man. Sweet, dude.
All right. Noted. Thanks a lot, Ari.
See, what he doesn't know is we will take him up on that offer.
Oh, hell yeah. Dude, Ari's one of my favorites. Has been for many, many years. I say it all the time.
Yeah, so there's a couple guys who come on here where afterwards I'll be like, oh, man, they agreed with me. That really means a lot. Fonz, throw up the capital markets and broker-dealers table. We just started writing a deep dive on this group yesterday. I was looking beneath the surface at the KCE components.
But it's not like we this has been, we've been on this for quite some time. This is not a new
We've been
trend.
talking about these charts, but when you see them, there are so many that are actionable right now and look just like KCE, whether it's Jeffries or Janice Henderson. Interactive Brokers and Aries are the leaders.
We were just talking about Virtu.
Dude, Virtu looks fantastic.
Virtu's one of the largest components of the KCE.
That's a capital market stock for sure. Beneath the surface, this stuff looks so good. So hopefully we have the report out today or tomorrow, definitely by tomorrow. But there's going to be plenty of long ideas. This is now a group where, just like he said, the charts beneath the surface in capital markets, broker-dealers, look a lot different than the regional banks. They look like tech stocks or industrials, taking out the prior cycle highs, no overhead supply above. Very different.
These are very different types of companies. You know, when you look at financials, you've got broker dealers, you've got insurance companies, right? You've got capital market stocks. When you look at something like healthcare, you have medical devices, you have biotechnology, pharmaceuticals, managed healthcare. You have all kinds of different industry groups within these sectors. And in many cases, they're very different from one another, right? Like gold miners and chemical stocks are very different, but they're all in the materials sector, right? So I think it's important to break that down. Ari does a great job of those industry groups. I think we do a great job of that as well. And the capital markets versus regional banks, an extreme example, but a great example nonetheless of two completely different types of stocks and market caps for that matter.
Yes. And insurance too, right? So I'm a big, hey, it's a bull market, put your offense on the field. I'm a big beta guy, as you know. I can't get behind the insurance stocks in the bull market. They're so good. They're slow and steady. These are quality businesses. But in a bull market, you're going to get so much more beta pretty much anywhere else. So it's not that insurance isn't good. It's just, it's not the kind of stocks that come to mind for me in this kind of environment where we want more risk, not less.
Yeah.
Speaking of capital markets,
they give you that. They'll give you some of that.
Speaking of capital markets here,
everybody, it just hit me today because I was setting up a little, I'm doing a little road trip late next week, going out to Boston.
Boston.
Doing a little stopping in the Berkshires on the way over.
Oh,
great wine shop there in Stockbridge. I am going to Wednesday is the first of the month. It's the first of the month. Get up. Remember that song? So we get new monthly candlesticks next Tuesday. How about that? That's pretty cool. Anybody care?
You look that far ahead and get excited about your monthly candles. This is a week out.
It's not a week out. Today's Wednesday.
It's about a week
days from now. So we're going to do our monthly chart strategy session on the evening of the 1st, and then I'm going to bounce and head up to the Berkshires, taking the family up there on the way to Boston. We like to stop. Yeah, the Berkshires is a very special place.
It's a great stop, and it is locationally convenient.
My wife and I spent our first New Year's Eve together there. My sister got married there. Oh, wow. It was my daughter's first road trip. She was 3 months old. We took her to the Berkshires. It's very, very, makes me very happy when I'm there.
So the Berkshires is a collection of towns. You know the area pretty well by now. Where do you tend to stay when you go? Did you stay in Stockbridge?
Yeah, near Stockbridge. We either get an Airbnb in Stockbridge. We're actually, I think, staying at the Red Lion Inn, which is this hotel is older than our country.
There are some really cute inns and little like boutique hotels there.
Yeah.
JC, you know how you have to listen to like the song. If there's a song about a certain place, you got to listen to that song when you're going there. You got to listen to "Sweet Baby James" by James Taylor when you're on your way to the Berkshires.
All I do in the Berkshires is listen to James Taylor. Driving through the Berkshires is like you're in a James Taylor song.
Yeah, you're right.
Things he's thinking of.
Yeah.
You know, like when he talks about the country road and whatnot, like he's about the Berkshires. Yeah. So like it feels like you're in a James Taylor song. Yeah. We put James Taylor on in the car. So yeah, sir.
That's appropriate. Okay, what I want to say, speaking of capital markets, the number one stock on my movers list this morning is B. Riley. Shout out B. Riley, filing a 10K, announcing the results of an independent investigation that found that the company had no knowledge or involvement with any of the alleged improprieties happening with the chairman and the CEO. Stock's up like 50 something percent today.
49.6.
This is how short squeezes
Whatever.
work, right?
This is how short squeezes work.
75% short interest. We're staying away from this one.
Speak for yourself.
Go for it. We're not writing about this one. We're not covering this one in the universe. We've removed it. I don't want to get into these battleground stocks, right? That's not what we're trying to do here.
I want to tell you, above 30.
I want a short squeeze that they're not holding special Twitter spaces about. Okay, I don't need this in my life. This reminds me so much of Silvergate in terms.
Yeah, I don't necessarily disagree with what you're saying there.
There's so many heavily shorted names that can squeeze for us without all the bullshit that comes with fraud investigations and late filings and delayed filings, right? And the improprieties that Spencer speaks of, or alleged improprieties.
Above 30, I don't hate it, Strazza. I don't hate it.
I mean, go crazy, but this one
I'm not going crazy. I'm just gonna let it settle down. It's 14 minutes of trading.
If it's too risky for me, it's too risky for you. I'm trust me. You don't want this.
Wait, too risky for the chief yellow officer, then JC, hands off.
This is out of my league.
If it's too risky. You're way out of your depth here.
This is so far below your line.
Shut up, Donnie. Right? Why don't we bring in Mary?
Yeah. Chart.
Yeah, I just wanted to quickly check on Tesla. Oh, nothing's happened since the open, really. It's been really quiet.
We didn't do all the earnings, though, Spencer. Did we?
We're never going to do all the earnings.
No, of course not. Yeah, there was like 400.
I know, but we got the big ones.
I'm more interested in the stocks with the lack of earnings, if you really want to know.
A nice beat for CME. This is on the capital markets theme, right?
Yeah, Visa and CME were the only two that were on my list to cover that we hadn't already talked about. Which chart is this? CME? Okay.
Good old Dominion.
Let me bring up
with a slight beat.
Yeah, CME may have beaten, the stock's getting hit.
Apple's lower today.
Apple's higher today.
Wow.
I mean, it's flat, but yeah. Speaking of a short squeeze, if Apple can get above...
Paying attention to Apple's stock price.
If Apple can get above 169-ish, squeezes on.
Do you like selling puts in Apple yet?
I might sell more. I don't hate that trade.
I might sell more.
I don't hate that trade. We sold the puts in Berkshire. I really like that. Honestly, if we're gonna sell puts in Apple, I want to be long calls also. I want to use that money to be long the calls.
Wow. So you're really changing tune. I love this. I love this, JC. We're going to have to short it.
What is it that you love?
Wow. JC just said green light risk reversal on the Apple.
That's not what I said. That's not what I said. I said, if we're going to sell naked puts in Apple, I'm only willing to do that if we're using the proceeds to buy out of the money calls.
I need the applause sound effect. I'm pumped up. We're going to go get our bull market puts on from Mary's segment. All right. This is fantastic.
It's all like Donkey Kong.
YOLO, baby. Love it. Love you.
Is that really something I once said? Choo choo, motherfuckers.
All right.
Oh, too many sound effects.
All right. Mary. Where's Mary? Is she here? She's here. All right.
Mary, I must tell you, Mary, you are the cherry on top of a beautiful Sunday that has been this episode. Let me just tell you that.
Oh, I don't know. You guys are pulling out all the good sound effects. I almost spit out my coffee right before I came.
I got more. I like to bring them out at just the right time.
Oh my goodness.
Strazza is very excited that I'm looking for a squeeze in the Apple, but I mean, Apple's setting up for a potential squeeze. I mean, just because we've been short, what does one have anything to do with the other?
Well, I'm gonna actually go look at that Riley after the show. After you started talking about that, I didn't realize it's
now
not too junky for me.
Now we're getting junky.
Oh my goodness!
So let me give you a proper intro. So Mary is our head of customer satisfaction, our head concierge, our chief sales strategist. Mary speaks to all of our high valued customers all over the world. And in doing so, there is no one on planet Earth who consumes more All-Star Charts research than Mary. So Mary's perspective, as far as I'm concerned, is very unique. And I'm always interested in what's catching your eye because Mary's not jaded like the rest of us. So Mary, with that being said, talk to me. What's on your mind?
Oh, you're going to hate what I want to talk about. I want to talk about Bitcoin.
Why am I going to hate that?
Well, so the one trade that I have taken, it was a couple of series of trades. I got added to positions last Friday at the open on Riot, CleanSpark, whatever it is, CLSK, and Mara. Just because okay, so here's Riot. Yep. So we had that little whoopsie move. Love the little whoopsie move, scoops and scores, whatever you want to call it. So I bought this on Friday. It's been paying really well. I think Sean and Steve also got involved in this early in the week with great success in the options. And for me, I'm watching Bitcoin and it's had nice consolidation. I'm really interested. Last night we were on an analyst meeting and talking about the 73 level. And I know that's kind of where your area of interest is to get long again. If you put a VWAP from the high, that comes in right at 67. And so I like to jump the entries using VWAPs. And so that's kind of where I'm really focused. If we get a close here above 67, and I don't exactly know what close means since it, trades 24 hours a day, but I'm really watching 67. And if we continue to struggle there, I'll probably take off those trades that I put on Friday and take my gains. But I'm kind of bullish and thinking I'm ready for a breakout, kind of along the lines of Steve.
So what's your time frame? When are you feeding the ducks? Because the ones that I got into last week, I'm already starting to exit here today. But then I'm looking at others like Mara and thinking of maybe moving some money over there. Mara against 19.
Yep. Yeah, it's right at that level
really
that we've been interested in for so long. And we've had the conversation so many times. This is the trade that just keeps on giving. We've played these miners over and over and over again, and at some point it kind of feels like enough is enough. But
we've abused these things,
right? So I've got a long-term position. I started these positions about a year ago, actually, and so. As we've progressed through this whole move, I've been taking some off, added back in, like I said on Friday. I'm watching to see how the next few days play out. And on Friday, Louis was on the show talking about how we had the halving happening over the weekend, and the fact that Bitcoin just has, even with that news that we knew was coming, it has held up really well. And it was kind of like, well, if something was going to happen, it would have happened, right? And now we're past the halving. It feels like the miners have huge catch up with Bitcoin itself. And I don't know, it's just one of those plays where it was just at a really nice level. I got involved, and I'm going to just kind of take day by day, see what Bitcoin's doing each day, and decide whether to exit or stay on.
Yeah, these are good. We're going to put out a free post with just levels on all of them. Maybe not so much trade ideas, but just the levels, because from a trading perspective, Sean can come on and tell you about how cheap the vol was and the Riot calls that we got into the other, Monday. From a trading perspective, these vehicles are just so good. What does Ari call it? A beta play? This is the beta play for crypto.
Made a lot of money on these miners in the last year. A lot of money. So they've been my best trade. And that's why I keep going back to the well. And that's why I kind of feel like I need to be cautious, because it's getting to that point where how many times can you dip your fingers in and be rewarded?
I don't know. Yeah. I don't know where I said it yesterday, whether it was on Spaces or our analyst meeting, but I was like, when you zoom out, these things have really gone nowhere. They've gone sideways since we started trading them on the long side. And I can't count how many times we've traded them successfully on the long side so far. So are we getting a little greedy? It feels that way. Something's been this good to you. Why not keep going back? And we're trading them off of almost like the same levels every time. Like, JC, do you remember Mara 19? Yeah. Hit the thing for like 80% back in January or February. We're back.
Right there.
Do you buy it again? Why not? Right? JC, you getting involved in this Mara or what? He's putting on. He's
in Riley. That's what he's doing.
He's trying to take my job. He wants to be the new chief YOLO officer.
It's just such a great title. Chief YOLO officer is really. I've never heard of a better title, actually.
I've probably been identifying as the chief yellow officer to myself internally for far longer than we've really.
Now
made
you're
it
out of the
official,
closet?
but yeah, I came out
That's
of the
cool.
closet.
I have been watching financials too. I had an alert on Goldman Sachs go off yesterday. I did not buy, but it's just, you guys have been talking about it. It's kind of a very clear level of interest. Interested to see where that goes. I know Ari was talking about that a little bit earlier. So that's one other area that I'm watching. I'm watching, buying some dips in the precious metals and energy and all the commodity space. It's had a pretty big move. So, using all of our research, using rangefinder to the best of my ability to find good entries. And so that's kind of where my head's at.
I think you're right to bring up energy and even areas of materials right now. XLE really held. It flipped that old resistance right into support. And I think these things are ready to kind of keep the drive alive here after a little bit of corrective action.
Keep the drive alive. Okay. I see that sports metaphor. Notice how Strazza's outfit changed.
I was going to say something.
Yeah.
Because we got JC. JC's back. I mean, this is huge.
Where did I go? Where did I go?
He's back. You're back. I don't know where you went.
It's not my fault that
they've
been kicking the shit out of Apple this whole time.
Yes. Not
There's
a top.
the green art.
Are you really want that this is a double top in Apple, the biggest, baddest company in the world? In the middle of a bull market, Apple's completing a double top. Get out of here. I love this.
Look how happy he is. He's so excited.
Bull markets are way more fun.
Because I have to buy the calls now. I've already sold the puts. I'm going to buy the calls.
Strazza's been very upset that we've been betting on Apple going lower, and it's been going lower.
It's like un-American of you. It's like what
I'll take the
Apple.
other side. I think it's un-American to not short stocks that are going down.
This is Apple.
So what?
Buying dips in bull market.
All I'm saying is that if you see a stock going down and you think a stock's going lower and you're not shorting it, that's un-American. George Washington would be very upset with you. Alexander Hamilton he would not be having this aggression. It would not stand, man.
Shorting is the most
American thing ever. You don't have to worry about the employees of the company. They're not your problem. You don't have to worry about like the C-suite or the bag holders. Like none of those people are your concern. Screw them all. Line go down. Let's go.
Only in America do we bet on bad fortune for the brands that we
don't have any control over it. It's not like we're like pressing a button and like people are getting fired. People are getting fired whether we profit from it or not. So screw them. Let's go. It's a very selfish endeavor.
That's true until you meet someone that works at a company and you feel bad. A few years ago, we were like endlessly shitting on Hertz. And then I met someone that worked at Hertz, like corporate, and then I kind of felt bad.
Fine. You can feel bad for the people, but what does that have to do with taking advantage of the price falling?
I'm just saying. I was like, oh man, I've definitely said not nice things before.
But one has nothing to do with the other.
The financial crisis hardened him. He's seen so much pain.
Yeah.
He's just
every day for a year, I would wake up and this is like in the old days where I used to watch basic cable, and I would turn on the TV hoping for terrible things every day for a year.
I will say, things are good right now. Love me a good layoff announcement.
Well, the stock market tends to love it in general.
All right,
yeah.
Well, Tesla had layoffs yesterday. Prior to the costume change, we all had shades of red on today. I wonder what that's about. But anyway, thanks to Steve.
Get your green on. Get your green on. We're flipping the book. Risk reverse.
We're flipping the book to recess.
Hit that bumper there, Spencer. What do you got, Mary?
So it's spring here in my state. So I love flowers, and tulips are my very favorite flower. And so I plant hundreds of them in my yard. These are some of my favorites that are out right now. I should be the same color. And so my tulips are coming up. So I brought a picture of my tulips. I love spring and my tulips coming up. Ironically, also we have where in the city where I live, we have this huge festival called Tulip Time. people come in from all over the country, even all over the world, like buses of old ladies come in just to take pictures of all of our millions of tulips. Where I live is in Holland, so it's huge Dutch settlement. I know you guys were talking about the Dutch earlier, which I kind of laughed about because I was bringing my tulips along with me. So that's what I got for recess today, my beautiful tulips.
So, tulips are a very special flower. It's also relevant. There's some real market history here. Fun fact, I can't grow these. I would have to like trick them. You have to put the bulb in the freezer or something, make it think that the ground froze, and then I've never tried it, but not a tropical flower, but one of the most beautiful. I would love more pictures.
Absolutely. Yeah. So they're all blooming right now, like I said, here in Holland, and the city plants millions. They're just everywhere for this big festival. So yeah, I've got lots of pictures that I'll show you.
That's awesome.
When you go to the airport in Amsterdam, there are tulips everywhere. My wife thought I was crazy because I kept wanting to take selfies with all the tulips. Like, she doesn't understand the history, obviously. So for me, I just thought it was like the funniest thing ever. Like, their tulip situation, like, granted there was a bubble, but they're still all about their tulips. Which is
Oh yeah.
So fun fact, I went to the Tulip Museum there, and they have the little shop. You exit through the gift shop as usual, right? And I'm in the gift shop, and I wanted to buy some tulips, and the people at the shop were like, this is going to be a pain in the ass of customs and this and that. And they said, where do you live in the States? I said, Connecticut. They said, oh, our headquarters is in Bridgeport. You could just buy them there. So I came all the way to the Netherlands to get some, legit tulips, and you're telling me to go back to Bridgeport?
I doubt that particular fellow or lady knew how shitty Bridgeport, Connecticut is. Yeah,
she had no idea, but they had a location. The Dutch Tulip Museum there in Amsterdam has a location in Bridgeport, Connecticut.
How about that? Fun fact. It's still, if anybody's listening out there, do not go to Bridgeport, Connecticut.
Don't go.
Don't go.
Don't go there.
Send someone you dislike. I want to give a shout out to the James. This is a wine shop. They're up slide 3 there. This is a wine shop in Stockbridge, Massachusetts, right in the heart of the Berkshires, right around the corner from the Red Lion Inn. Great wine shop. They got some hustle in Massachusetts where like they get to cheat the tax system somehow. I don't know. I'm not going to pretend to know, but there's some sort of loophole in there that these Massachusetts people are taking advantage of. The wines at this shop are very affordable, and they come with age, right? So you can go in there, you can get a 20, 30, 40-year-old wine, a Gran Reserva from Spain, or a Brunello, a decade-old Brunello or something like that. Great Burgundies, fantastic wine shop. So if you find yourself in Western Massachusetts, which I like to frequent, and if you like James Taylor, this is what he's singing about. So, and the James Wine Shop, Stockbridge, Mass. Hit it.
All right. That'll be it for us today. We have our weekly team meeting in about an hour. If you want to get in that, the only way to do that is talk to Mary. So there's her email, there's her number up on the screen. Give her a call, shoot her an email. She'll tell you how to get in. We have a little bit of a different schedule today. Sean, because he's going out to town tomorrow. So Sean's doing the options jam session today at noon. We'll have the hot corner with Strazza at 1. And that's what we got. So thanks for everyone. Thanks for hanging out, everyone. Thanks to Ari Wald. Thanks to Mary. Thanks for the likes. Thanks for the comments and the votes and the chats and all that good stuff. Go make some money. And we'll see you.
Lows for bonds. Adios.
Bye, guys.
Peace.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off.